We've just had the 11 Bitcoin ETFs approved, which is a massive moment for the crypto space. We've also heard that Vanguard and some other massive companies are not actually going to be allowing their customers to invest into these, which is a very, very interesting choice. But with this and the Bitcoin halving event and the potential bull run coming up this year, it does make me think, are there any stocks that could benefit from this? The answer is absolutely. And in this video, I'm going to share with you my top 5 picks for stocks that could benefit from this whole crypto narrative that we're seeing. And the last one that I'll share later on in the video is one that I don't think many people would have thought about at all. I won't be including any Bitcoin mining companies in this video today because I made an entirely separate video just focused on them that I will leave linked on the screen now. Up first, we have a company that if I were to play a word association game and the word was cryptocurrency, this particular company, this word, would definitely be up there in my top 5 picks. And that company is my first stock on the list today. Coinbase Global, ticker symbol COIN. Coinbase is one of the leading trading exchanges and they basically make money by taking a small transaction fee every single time one of their users buys or sells any cryptocurrency on the platform. They also have a debit card and they offer loans whereby users can pledge their Bitcoin or other cryptocurrencies as collateral, and then they receive a low interest loan to cover expenses. They did really well during their Q3 earnings, absolutely smashing estimates. But so far in January alone, bearing in mind that it is the 12th of January when I'm filming this, so it's been 12 days, they have seen a higher transaction volume than they did in the whole of October 2023. And this is of course because the interest in crypto is only going up, the momentum is building, and if this continues, these figures continue to grow, the next earnings should be absolutely massive. It's also worth noting that they hold over 1 million Bitcoins and they are the chosen custodian for BlackRock. Actually, the majority of the Bitcoin ETF issuers have chosen Coinbase to be the custodian. So clearly they are a very trusted company in the crypto space. Currently, one share of Coinbase will cost you $134.76. And you can see that over the last 1 year, Coinbase has absolutely annihilated the index, up by over 222% compared to the S&P, which is currently up over the last 1 year, just under 21%. If we expand this out to a 3-year period, we can see a very, very, very different picture, down by 44%, actually significantly underperforming the index. With a company like Coinbase, you do expect to see this massive, massive volatility that we see here. Now we're shifting gears slightly and we're going to move to a stock that isn't actually a crypto exchange platform, but is within the fintech space. This stock is Block, and they actually used to be known as Square. The ticker symbol is still SQ, and we'll actually discuss why their name change is quite significant in a little bit. They have a few different businesses under their main business actually, but one thing that they do is they offer hardware, software, and services to small businesses to enable them to accept payment. But they also have their Cash App, which is kind of like a standalone product, and that allows people to send money, receive money, set up direct deposits, and so on. And this app, this Cash App, also allows Bitcoin trading. Their strong performance in Q3 was mainly caused by a 37.5% yearly growth in Bitcoin revenue through their Cash App product that we've just spoken about. And this actually accounted for more than 50% of their total net revenue across the whole company in Q3. They have even more ties to Bitcoin actually. In December 2023, they launched their own self-custody Bitcoin wallet called BitKey. This basically gives users more control over their cryptocurrency, and like I was saying earlier on, they changed their name from Square to Block to represent blockchain technology. They are very committed to the adoption of Bitcoin and crypto as a whole. One share of Block right now will cost you $67.17. Over the last 1 year, they've not had a very good time, which is quite surprising because quite a lot of the other crypto companies, crypto related companies, and fintech companies have seen quite a lot of growth, down by 5.3% over the last 1 year compared to the index. This is significantly underperforming. If we expand out to a 3-year period, again, not doing so well, down by over 70%. Now we'll just look at a 5-year period, and what you can see here is that actually compared to their all-time highs, they are trading at about 76% down from those. I think all fintech companies should now be looking to position themselves in the crypto space, because if they don't, they are definitely not as competitive as some of their peers. PayPal is another fantastic example of a fintech company that is looking to expand within this crypto space, but I won't speak about them in this video as I've made a separate video entirely dedicated to them that I will leave linked on the screen now. But we will move on to the fourth stock on the list today, and this is another fintech company that I think could really benefit from this crypto bull run. And that is Robinhood, ticker symbol HOOD. Robinhood is one of the largest crypto exchanges in the United States, and they are positioned very, very nicely to capitalize on this trend that we are seeing. They offer commission-free 24/7 crypto trading, which investors love, and actually they've recently launched their crypto offering inside of Europe, so they are only looking to expand. Revenue growth has been fantastic year over year, and actually a lot of their revenue has been coming from crypto. One share of Robinhood will currently cost investors $11.15. And looking at this chart here over a 1 year period, Robinhood has done much, much better than we saw with the previous company, which of course was Block, returning investors nearly 26%, outperforming the market, but some really, really sharp increases. And likewise, what goes up must come down, some very, very quick decreases too. Going over a 3-year time period, not so fantastic here, down by 66%. And you can see that they went public very, very recently, and they had a big surge on IPO. Then that really quickly came back down and traded at more reasonable levels. Now let's talk about a company that is very interesting because they operate the world's largest financial derivative exchange, and that company is CME Group. They offer investors the chance to trade futures and options on crypto, which is already popular but could get even more so, as of course these financial derivative options give investors leverage and the chance to manage their risk whilst offering big upside opportunities. Cryptocurrency derivatives are still quite a small market for CME Group, but I think they will continue to expand this in the future. This company actually does offer investors a dividend with a dividend yield of 2.24% and a dividend growth, so consecutive years of dividend increases of 13 years, which is pretty good and shows reliability. Let's have a look at the charts now. Over the last 1 year, 14.62%, underperforming the index. 3 years, we see 4%, which is not very good at all. You could have definitely beaten this quite easily by just holding an S&P 500 ETF. 5 years, a little bit better, but still nowhere near as good as the index. But who knows, do you think this company could see further growth in the future? Let me know in the comments below. Now we need to talk about a company that is more linked to the crypto bull run, to cryptocurrency, than you may have ever imagined. It's a mega cap company that's seen returns of over 230% in the last year. That company is of course Nvidia, ticker symbol NVDA. I'm bullish on Nvidia, and there are many, many good things that I could say about this company, about this stock, but you may be wondering how they've actually ended up in a video all about cryptocurrency related stocks. And that is because although Nvidia don't directly deal with cryptocurrency, they do produce GPUs, graphic processing units, which are crucial, vital for crypto mining. So there's the link. The performance of crypto mining companies, Bitcoin mining companies, are closely linked to the price of Bitcoin because their profitability depends significantly on the value of cryptocurrency that they mine. When Bitcoin prices are high, mining becomes more profitable, leading to higher revenues and potentially stock price increases in these crypto mining companies. So during periods of heightened interest and value in cryptocurrencies, Nvidia's GPU demand actually goes crazy, especially among those Bitcoin mining companies. They all look to Nvidia and some other companies to give them the GPUs that they desperately need. And a couple of years ago, Nvidia launched a lineup of chips specifically designed for crypto mining. Revenue growth year over year, 57.07%, and forward revenue growth, basically 50%, which is absolutely incredible. One share of Nvidia right now will cost you $546.80, which is very, very expensive. But of course, we have fractional shares. And could this actually lead us to potentially think that Nvidia will do a stock split soon? I don't really need to read out the numbers because you probably already know, but Nvidia have had a crazy 2023. Over the last 1 year, 243%, which doesn't just outperform the index, but it outperforms many, many stocks. 3 years, again, absolutely incredible, really incredible stock. 5 years, the numbers speak for themselves here. I'm going to leave some freebies that I'm sure you'll be very, very interested in the description and as a pinned comment, so don't forget to check those out. Stay tuned for the next video, but until then, keep analysing, keep investing, and don't forget to hit that subscribe button.